Hello, my name is James Colclough. I'm the Managing Senior Partner of Austen Morris Associates, and I'm joined today by another partner of Austen Morris Associates, William Coppin. Today we're going to be talking about alternative asset management, which is a topic that's very relevant at this point with the current market conditions. So, William, what areas are you discussing with your clients with regards to alternative asset management at the moment?
Yeah, that's a good topic to discuss. I guess in light of the current situation with world markets having corrected and increased volatility and all the sort of issues that we're facing at the moment with euro slowing down, etc., alternative assets offer a good opportunity to continue investing money, continue trying to achieve growth or income, but in something that's less correlated, so an asset class that gives a little bit more insulation. So major sort of macro events aren't going to affect the value of, say, a property in London, or maybe some land in the US, or commercial property in Canada, or whatever it might be. So I think at the moment, alternative assets, we're getting a lot of interest or a lot of inquiries from clients, really looking to know what the positives are there, and obviously what the negatives are there. And I guess a quick summary of that would be the positives give access to assets that are not correlated, as I say. So macro events, micro events aren't going to affect the value so much. You're perhaps going to get more of a consistent income stream or consistent growth due to the nature of a tangible asset. There's always intrinsic value, and there's always something nice about holding a tangible asset. You can touch and feel a property, whereas with shares, apart from a share certificate, that's all you have as ownership. So I think real assets, whether it is gold, whether it is property, or whatever else it is, there's major advantages in this day and age to hold a portion of the portfolio in something like this. On the opposite side, though, of course, these tend to be less liquid. There's not always a ready sort of secondary market there if you want to exit. And of course, pricing, assets that aren't sort of commonly traded can cause a few issues as well. Something's only valued at what somebody else is prepared to buy it for. So, I mean, the main areas that we're looking at the moment are things like land, commercial property investments, maybe some sort of private equity or something similar. And this, as a part of a portfolio, maybe 5 or 10% offers real opportunity for diversification. So I think as a sort of summary, what we're suggesting is, obviously we're still bullish on traditional assets, and that's still core business and core allocation for portfolios. But certainly, if you want something different, if you're nervous about the markets, don't just sit in cash. We can invest, but in something that is not traditionally traded, so you have that sort of non-correlated asset.
Okay, so if a particular client is looking for something that's non-market correlated and they're looking at alternative asset management, is there a particular minimum time frame they should look to hold that kind of physical asset?
Yeah, and again, that's a very good point. Alternative assets, partially due to the liquidity and partially due to just the nature of how the returns and income's derived, the typical time frame is going to be sort of 5 to 7 years. It's not a sort of quick in and out trading, stock or whatever. So it's got to be looked as a medium term investment. And of course, due to the nature of the type of investment, the returns can be considerable. So it's not necessarily something that is sort of low risk, low return. So returns can be considerable, but time frame is certainly minimum sort of 5 to 7 years.
Okay, so if someone does have an interest in looking at this alternative asset management class, what sort of questions should they be asking their advisor, or what should they be approaching their advisor and asking for?
Certainly, I mean, as with all kinds of investments, different people require different sort of types of investments. So the key thing is, amounts of money that you can afford to invest. Some opportunities do have a minimum amount that can be invested. Typically, this is anywhere from $25,000 up to maybe $100,000 as a minimum. So the question is, obviously, what is a minimum, what is a maximum to invest? Of course, a time frame, how long do I need to be investing for, the liquidity, is there a secondary market, how do I exit, who will be managing this, and of course, what security is provided in a certain type of alternative asset. If it's land or if it's property, then you're going to be owning the title, presumably, of that. If it's something a little bit more sophisticated, like private equity investments or similar, the ownership structure has to be known, and you've got to be comfortable with that.
That's great. Thanks very much, William. Thanks for your insight into this alternative management asset class.